Hello and welcome to The Exit presented by Flippa. I'm your co-host, Steve McGarry, and this is a 30-minute podcast where we sit down with amazing entrepreneurs who have been there and they have done it. They have bought businesses, they've sold businesses, they've operated incredible businesses and scaled them up. And we learn some of the nitty-gritty details that all of these experts have to share with us. And on this special episode, I get the chance to sit down with Deven Soni. And he is the co-founder of Kingmakers. But before we jump into that, check out the previous interview I did with Jonathan Catan, the CEO of Unsettled. It's really fascinating, the future of work, being a digital nomad and moving around into these different community-focused co-working events at Unsettled. It's really, really cool. So check that out in the show notes and the links wherever you guys are listening. So on this episode, I sit down with Deven Soni, the co-founder of Kingmakers. The two subsidies that they have are Acquira and the Kingmakers. The Acquira part that is like an accelerator or training program that helps business buyers acquire, optimize, and grow their acquisition. So it's two pieces of Kingmakers that is really interesting. And the fact that Deven kind of walks us through their process of how they onboard business owners to buy and acquire and optimize and grow business acquisitions is really fascinating. Let's definitely dive into it now with Deven Soni, the co-founder of Kingmakers. What is up, everyone? I am here with Deven Soni, the co-founder of Kingmakers. How you doing, Deven?
Doing great. Good to be on. Thank you.
Yeah. So before we kind of get into the nitty gritty, let's go through your background and what brought you in to start Kingmakers.
Yeah, absolutely. Growing up, I grew up in the San Francisco Bay Area and always kind of been like a bit of a finance nerd. Loved reading about, kind of stock market and banking and all those weird things. And eventually studied finance in school, worked in, investment banking for a bunch of years at a big kind of Wall Street firm. And, eventually through that fell into, kind of an investing role where I was working at Goldman Sachs, helping them deploy capital into technology businesses. So we were investing in, everything from, software as a service companies to, kind of digital media businesses, invested in companies like Yelp. So like we ran the gamut. And, the one thing that I loved the investment side of it, but, what really was a little tough for me was kind of this, I'd always kind of just grown up as like being a value investor, right? So, and in many ways, in most common places, technology investing and value investing don't really mix, right? Like you can't be like, oh, I buy really cheap businesses, but then invest in, Zoom or something, right? At like 400 times next year's revenue. So I kind of love the technology side growing up in Silicon Valley. But basically, as I was, kind of searching for businesses, I ended up meeting someone that was doing, and this is like in 2009 or something, meeting someone that was doing, owned a bunch of domains and owned a bunch of websites and was looking at kind of the cash returns that they were kind of generating. And I was like, wait, this can't be real, right? Where at the time things were trading for like 1 times earnings because, this is pre a lot of stuff. Like maybe Flippa was the only platform that really existed at the time. And I was like, this is crazy. I got to look into this. So I spent, sort of learning. Like I literally, spent probably 2 or 3 obsessive days on, I think, Flippa and basically was like, okay, I'm going to start making some offers on these things because this is way more money than making in my bank account right now. So I literally, I think, and this was, so it's 2009 and did 2 things. So I bought my first website, which was I think it was an affiliate site for like Bobcat tractors or something for like 10 grand. And at the same time, I was like, I had no way to run this thing. So I went to Amazon and bought WordPress for Dummies, like literally the same day. Closed the transaction, bought WordPress for Dummies, and was like, okay, I'm going to figure this thing out. Started from page 1, figured out how to transfer the domain name, transfer the payment account, and just like own this thing. And it was going great. I think we were literally, I think we'd made like 30% of our money back in like 2 or 3 months from the purchase, is making $1,000 a month. And then we got the old call from Bobcat's legal team because the business apparently had Bobcat in the domain name, and they filed cease and desist because you're not allowed to infringe on trademarks. So all of a sudden our business kind of went to zero really quickly. In my business, but so that was kind of the first lesson. Really, I mean, it was still intriguing to me. Also, just realized I had a lot to learn, a lot of mistakes that were made, and I think the only way to make some of these mistakes is like to spend your idiot tax, right, in any industry you do, and that was my idiot tax for this space. But that's how I kind of got in and really got hooked from there. And eventually, a couple years later, decided to kind of, bought a few more things, like 4 or 5 businesses. And really, the thing that really changed my trajectory was found a partner that was very, very good on the operations side, where I'd been good on the finance side. And we sort of moved on to starting a fund to go kind of buy, a lot of these businesses, which we can kind of touch on, later on the topic.
Nice, nice. And we talked briefly about Kingmakers right before the call. But before we get into that, kind of the I guess you could call it the inner workings there, the Acquira concept, I wanted to touch on those values because I've brought this up multiple times in the past, where a lot of times people have guiding principles. They're not really, they're kind of fluid a little bit. But one of the things that really drew me to you guys was the just clear clear upfront, these are our values. And I think that that is something that is so rare currently. And I wanted to just highlight that, and I wanted to just kind of get your thoughts on what your values are, and why you guys approach it like that.
Sure. One of the things that has kind of, I think, differentiated our group and our team from many others doing similar things has been just we move really, really fast. We went from, owning, one business to 10 businesses that were all kind of on the same size and millions of dollars, within 6 months. And, one of the things that we realized was that we, I have a partner, Hayden, who we kind of had built this business with Acquira and our prior firms as well. And we realized that, as we brought people on, a big challenge was kind of the indoctrination and getting to know, like we spoke the same language because we've been working together so long, but, it's very hard to move fast when, you don't all speak the same language. You don't share the same values. You don't realize what your goals are and what you should do and shouldn't do. Right. And for us, it took time. And one of our key employees is now one of the president of Acquira, and Kyle actually took the time to, write down everything that we sort of valued and sort of exemplified into these core principles. And what we realized is when everyone speaks the same language, you can move a lot faster. You can trust each other a lot more. And that's, the reason we started this. And then we decided to even kind of take it even further and say that everyone's, performance reviews on a semi-annual basis are based on how they have performed relative to their core values. All of our feedback is based on, did you meet the core values? When we bring people onto our team, or when we decide to partner with someone or invest with someone, it's always, is this person a culture fit based on our core values? We even had something called a gauntlet, which is basically for people that want to partner with us to buy businesses. They go through this 1 week process, and the first couple of days are really just, do you share the same? Let's over communicate what our culture is, and are those things you share? Do you share that transactions have to be win-win? Do you also believe that you should empower everyone in your organization to make decisions and not make it a top-down organization? And if those things aren't cultural fits or people are wishy-washy, then we say come back when it's a fit, or employees as well, right? Because when you kind of speak the same language, it's really, really easy to kind of just like I said, trust each other and move fast.
Yeah, I like that. The onboarding, just making sure that it's a fit, because that's something that I've learned, and many operators that I know have learned, that hiring and onboarding people is make or break for any size of a startup, whether you're 2 people or 50 people. It can implode with a bad hire. So that's really cool that you guys have kind of built out this strong bridge to bring people on. I like that word too, indoctrinate.
Yeah, it's we really thought deeply about it, and there's 3 things that are really important to our business, right? It's bringing on good people as employees, it's buying good businesses, and bringing on good operators to run the day-to-day of the businesses, right? If you have good people, good businesses, and good teams, everything is going to go well. You're going to have a lot less stress. People are going to level up really quickly, and we think the same way about businesses as we do about people. We have our own set of like guiding principles. Like if this is there, we're not going to do it. And similar to if this is there, we're not going to hire someone, or if this is there, we're not going to bring someone as a partner. It's just an end conversation, because that, like you said, one of these mistakes can really just be a snowball, a negative snowball to like the poor culture.
Yeah, most definitely. So shifting gears into kingmakers,
Mm-hmm.
let's talk a little bit about that, because a lot of people listening and watching, they are interested in buying businesses. Let's say they're interested in selling businesses. From the buyer's perspective, what is kingmakers? Because when I first saw it, it kind of, a light bulb went off, and I was surprised that I'd never heard of this before. First
Yeah,
of all, but
yeah,
yeah,
yeah.
what is it?
Well, we started from pretty much a zero, in terms of experience and buying businesses. We all kind of had experience in our own special spaces, but like, when you buy a business, you have to learn just a tremendous number of things, from how to find a business, how to, evaluate it, the financials, how to make sure you're covered with legal liability, to build a growth plan, to interview the team that's there to see if they're a fit, to structure the deal to make it a win-win. Like it's like you could get a master's degree or PhD in like every one of these verticals, and you need to be like pretty good, because if one of these things fail, your acquisition can fail. So what we realized is, by buying that first 10, 20 businesses, we became very, very good at it. And we, one of the mantras we have internally is, you never do something twice. So the first time we do something, we document the heck out of it, to the point where you can hand it off to my 5-year-old, and he can handle it, right? Like not really, but maybe in a couple of years. Like, we really try to make things super simple and streamlined. We use a lot of tools. So what we had at the end of this was basically this compendium of just like a playbook of hundreds and hundreds and hundreds of pages and processes and workflows of how to buy a business. And what we realized is, we were so good at that side of it, that the side that became very hard was, how do you actually manage the day-to-day of the business? Like, how do you become really good at learning about socks or beach towels, or enterprise software for dentists, right? Like, you buy a variety of businesses, but like, you need to really dive into that niche, but you also need to get good at the buying side. We got good at the buying side, but like, it was really hard for us to say, we're going to be the best in the world at yellow beach towels, because that's the side we bought. So what we decided to do was, open up our infrastructure, similar to like what Amazon does with web services. Like, they eat their own dog food, right? So what we said was like, let's actually partner with people and teach them how to buy a business using our framework. And in exchange, we can invest our capital into, instead of buying 100% of the business, maybe we'll buy a minority stake, and partner with someone that can learn everything there is to learn about SaaS for dentists, right? And we can be really good at the acquisition side. We can be really good at helping them find the vendors to do conversion rate optimization, onboard a bookkeeper on day one, so that your books are done perfectly, optimize the taxes for the business, you save 50% on exit. Like, all these things are we're very good at, but, and partner with someone who really wants to own a business, wants almost like an exec team in a box, or wants a board of directors in a box that can help, kind of guide some of the strategic direction, shortcut the process for them, make sure they don't make any critical mistakes like the ones we made when we first bought our businesses. And, we just saw it as a win-win. And I think people have really resonated to the point where, we get, probably like 50 or 100 calls a week from people that want to work with us to buy business. So it's been fantastic. It's really, finding a neat product market.
Nice. That's very cool. I'm so surprised. I'm glad that I've learned about it now, but I think that something like this is so key for someone that's interested in getting involved in the space, because there is so much potential downside, but there's so much potential upside. So there's a really great saying that I had a great conversation with my friend John, who has bought and sold multiple businesses at the Flippa conference last year. And he was saying that on Wall Street, hedge funds, they have a saying that's look down before you look up. So check your downside before you look at the potential upside. And I think that something like a AWS style resource hub for people that are getting into buying businesses, it almost de-risks, not entirely, but it helps with preventing some of that downside. And I know that downside's important. Like, you guys have kind of maneuvered around that yourself, and you've learned and failed and things like that, just like all of us have. But with that said, what type of businesses are you guys kind of going after? Is there a specific niche, or are you guys just really focusing on P&L before the type of business, if it's e-commerce or content or SaaS?
Yeah, no, that's a great question. I just add one element of detail. We do both kind of digital businesses and kind of more traditional brick and mortar businesses. I'll focus on the digital side for this call, and maybe just touch on the other side very briefly. But on the digital side, I think what we look at, number one, with like a triple underline, is looking down is exactly right. We look at it, which is what are the single points of failure? Where is the thin ice that you're standing on? And what can shut your business down overnight? Because that's always the trick with digital, is that there's almost always going to be some single point of failure. And that single point of failure could be that 80% of your traffic comes from one traffic source, whether that's Google or Amazon or Facebook or Pinterest. It could be that fine, you have 3,000 like your root domains and your traffic comes from everywhere on your big email list, but you only have one monetization source. And that monetization source can go away, and your next best alternative is like terrible. It could be that you have a software tool that's reliant on an API that can shut down in any day, right? Like, so those are things we really try to understand first. And if we have one of these single points of failure, the number one question is, can we mitigate this within 30 days? And sometimes you can. And you can say, look, well, if there's only one monetization source that makes all of your revenue, can I call the next 10 competitors to this company and say, can someone give me the same deal? And if I can, then fine, I'll take the risk. But if I can't, then it's a don't pass go. Mm-hmm. When we talk about sector or niche, like we've had a bias because we do a lot of volume for businesses that have really strong cash cycles. So we've tried to weigh a little bit from e-commerce, not to say like, we do e-commerce in high margin niches like supplements or pets and things like that, because this can be high margin. But we don't like having our money sit on an inventory in warehouses. We like our money being compounded through deploying it into businesses and often levered. So like that's we look for kind of more stable businesses, not ones that have had a giant uptick over the past year or two. Businesses that have a strong diversification of revenue sources and traffic sources, and ones that have kind of like upside, right? Like that's kind of the downside case. And then when we talk about the upside case, I think like how we think about it is what are really, like, we think about upside in two things, right? One is like, what are the things that an absolute like newbie can do to improve the value of this business, right? Because like the biggest shifts mentally that we had in buying businesses was we started to think that like we're smart. And we, when we started out, like, okay, well, the owner's not doing this. We're smarter than them. We're going to do this, right? And like that, you do that, and you're just going to get smacked. And you really realize, like, you really have to put your mindset and set, like, I am like less smart than the person I'm buying this from, right? Because like I'm going to make a lot of mistakes. They did a lot of things well that we're not going to do well, and you really have to put yourself in that position. And because of that, when we say, what are the things? What are the 1, 2, or 3 things that we're like really, really good at? Like, what's that? What's our core competency? And what are the wins that we can sort of consistently project from that core competency? It could be conversion rate optimization. It could be price testing. It could be, some people are just terrified to pick up the phone and build a direct advertising relationship, right? Like, look, if we're really good at that stuff, like, let's factor that that's going to improve, right? But let's also factor that like everything else is going to go wrong. And like, is this still a good purchase if everything has gone wrong except this one thing? What's like our low-hanging fruit? If we double the business from conversion optimization, because we know that you should do a free trial without credit card first, and upsell in this way, and then do a cold call or a text, like that's our stack, and we know it improves it. Then let's say that works, but nothing else works. Is this still a good buy? That's kind of that next level of concepts we look at. And the third level is how big is the addressable market? And what are some new distribution channels we can find to attract the digital market? Is it, deals with affiliates? Is it increasing paid traffic? Like, this is probably too much in the weeds, but that's kind of how we think about stuff. It's like downside, the easy wins, and then the big wins down the line.
Got it. And in terms of, you said there was a week-long period for someone that's coming into Kingmakers. What are you guys kind of analyzing? What are you looking for with someone?
Sure. And just as a that side, that week-long gauntlet, we call it, has been a little bit more for people that want to buy brick and mortar. And just like, I'll give you 2 sentences. Like, we've been buying digital businesses for 10 years. And the last year has really become a seller's market, because a lot of people with COVID especially want to buy digital businesses, multiples going up. There's fewer things on the market. So what we kind of found is just that things are expensive, and the risks aren't going away. algorithms updates are happening more frequently. Updates to APIs are happening more frequently. So there's a lot of downside risk, and some of that time that upside risk isn't there. So we've said we're still buying digital, but let's also see if we can expand into other businesses like brick and mortar. So an area we're spending a lot of time is things like plumbing and HVAC and things like that. These are companies that are going to be around for 50 years, because if we're going to build a big platform, let's build it on companies that are going to be around for 50 years, not 50 months. So we learned the hard way. We bought our first HVAC business. We realized that some things were very hard, like people, but digital marketing was very, very easy. It was kind of like going from Major League Baseball to mior leagues, because we've been competing with venture funded companies with $1 billion in digital, but now you're competing with three 72-year-old plumbers in midtown, pick your state. So that became very easy for us. But the other side became hard. So in order for us to kind of vet people that we wanted to work with, a little more so on the brick and mortar, because we've done so much on the digital, we know really quickly. But on the brick and mortar side, what we did was basically build a gauntlet, which is basically a 1 week indoctrination period where we say, come work with us on a business we already bought, and you try to analyze the legal risk, you analyze the upside, you analyze the P&L and the opportunities there. And at the same time, learn about how we do these things. So you can learn about our culture, and spend a week just in our shoes and doing exactly what we did to see, one, do you actually like the day-to-day of running a business, or is it suck? Because some people buy a business before thinking about it. All of a sudden they've cut the check, they get the domain name, and they're like, I don't like this. So we want to say, put yourself in the shoes of a business owner for a week or two to really see if this is what you like doing. And then secondly, we can see people that go above and beyond on some of the exercises. People that say, oh, I thought about this idea, even though it wasn't in the program. Those are the people we really want to work with, right? Our folks that are outside of the box thinkers that want to do more, that we can actually learn from, not just teach. So that really quickly, when you work with 10 people, you'll identify the 3 that really have gone above and beyond and really care. And those are the people we double down and want to work with. So does that add some color into that process?
Yeah, definitely. Just because I was super curious, because you brought it up while you were explaining it right there, is a lot of people being, I guess you could say, displaced after this whole pandemic has kind of swept through, and a lot more demand around buying a business is around there. Let's say somebody has quite a large amount of savings that they've saved up. They've either lost their job or left their job during the pandemic, because they're seeing kind of a shift happening. And then now digital is an option, or even brick and mortar in a something like an HVAC business that's not going away anytime soon. And I love the idea that you guys are actually implementing brick and mortar as part of your strategy. I think that that's really smart, because that is the protection of the downside that we were talking about a minute ago. So I really like.
We spent almost a year analyzing literally 3,000 industries, and we looked at everything from default rates for SBA loans, industry growth rates, how future-proof is the industry, how is it going to be taken over by Google or Amazon or Tesla, or automation or offshoring. And what we realized was that, and secondly, the hard thing with digital, right, is that you can say, everyone buys the first one, like, oh, I want to do a roll-up, I'm going to buy 100 of these things, right, and put them all together. But the problem is you can't find 100 businesses in one niche online, right? You can't find 100 pet blogs or digital marketing SaaS tools, because they're not for sale, right? This is a seller's market, so when something goes up for sale, it's a good business, it gets sold in 2 days. And if it hasn't been sold for 2 days, there's a reason, right? Because there's so much cash flow in the industry now. So we wanted to find an industry like HVAC or plumbing, where there's hundreds of thousands of businesses, all of which are run by people in their 70s that are ready to retire. And so we can go to the store and go buy 3 HVAC businesses or plumbing businesses tomorrow if we want to, and put our systems in, which is why super low default rates are going to be around forever. There's a licensing issue, so competition is limited. So it's the reason, we did restaurants and not, HVAC and not restaurants or massage parlors or property manager. We sort of went through the systematic process of finding our next thing.
Yeah. Really well thought through. I like that strategy. So the final kind of finale question that I like to ask everybody is, knowing what you know now, what would you tell Deven 10 years ago?
Yeah, I would say that, owning a business is a fantastic tool to learn, to create personal empowerment, and for wealth generation. I think there's a lot of things that, if I was, I'm a little older, I'm gonna say what I told myself, like, 15 years ago, right, when I was in college, right, versus like out of college. But if I had said, like, what should I do? It would be, learn how to run a business, save money, and be, pick a great business to buy, that can, create a ton of wealth for you and your family, create a ton of empowerment. And if you want to grow that into an empire, you can grow an empire. If you want to sit there and work 40 hours a week and make 600 grand a year and spend time with your family, like that's admirable as well. But I think by owning a company, you can really create a lot of freedom and empowerment, especially if you structure it in a way where you aren't the bottleneck in the business. So 100%, I think, knowing what I know now, I would have probably bought a business earlier, or bought a bigger one earlier. For sure.
Well said. Well said. Well, last step is to roll out the red carpet. Where do you want people to go and learn more about your projects that you're working on?
Sure. So our holding company is called Kingmakers, and it owns everything we do. So kingmakers.co is where you can go there to see basically everything we're working on. If you're literally looking specifically for the M&A side, Acquira, ACQUIRA.com has a lot more color on how to work with us. Whereas the Kingmaker side is really just more about our holding company. And lastly, feel free to email me directly, Deven, Deven, at kingmakers, KINGMAKERS.co. I can get the .com, but that feel free to reach out anytime. Feel free to add me on LinkedIn. I'm pretty responsive, especially with the pandemic. I sit in my office all day, so feel free to reach out if anyone has any questions.
Excellent. Excellent. Well, if you guys are listening in on Spotify or iTunes or watching on YouTube, all the links will be in the show notes to everything that Deven just mentioned. But once again, thank you so much for coming on the show, Deven.
Absolutely. Cheers. Thank you.